Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you everybody so much for joining again, our ritual to talk Bitcoin on Sundays. We are, of course, screen sharing the website here, cryptocast.network, where you can find the YouTube, Twitter, Instagram, RSS, and iTunes links for that. And we really appreciate if you guys are new to the channel to hit the subscribe button, hit that bell button as well so you guys can know when we put new shows out, and give us a thumbs up if you guys like the show. And if you are an audio listener, please give us a review on iTunes. We'd appreciate that. And we are, of course, have the merchandise available on the website for you guys to be able to help support the channel. And then we are screen sharing the QR code at the bottom, of course, because this is a YouTube supported or a community supported YouTube channel for you guys. And we hope that you guys are really learning some stuff. We really appreciate all the donations and feedback that we get back from you guys. So with that aside, let's go ahead and stop the screen share and get into your quick bit section before we introduce the amazing panelists that we have today. So this shouldn't take too long, guys. Let's get through this. Where do we go? To the top. There we go. So first one is the consumer merchant and payment network Square unveiled a new point of sale terminal system this October 19th in a move which sparked excitement about possible Bitcoin integration. So this is really going to be interesting, guys. As you guys may or may not know, Square, the CEO of Square, Jack Dorsey, is a big Bitcoin fan. So this may get some more rumors going in that route. Then as investors speculate when Bitcoin will bottom and reverse course, a recently released CME report shows that Bitcoin futures daily trading is up 41%. So that's pretty interesting stuff. The futures is starting to pick up as we complete this huge unwinding of this descending triangle in Bitcoin price. And then G4S, a multinational security firm, has jumped on the crypto custodian bandwagon by offering to secure clients' digital assets in a cold storage vault. So again, just more of these big, huge companies, guys, jumping into Bitcoin, and we'll be talking more about that today as well. Then during October of 2018, Bitcoin trading volumes on the peer-to-peer platform Local Bitcoins reached peak levels in Argentina, Venezuela, and Egypt. So again, guys, you know, Bitcoin's going to go where it's needed the most first, and that is where it is continuing to go. Then we got the debit card. Bitcoin purchases via regular ATMs are now a reality in the United States. This development foregrounds the recent partnership between GenMega and Liberty X. So the collaboration really will allow people to buy Bitcoin from over 100,000 ATMs now. So that's in the United States. So that's pretty cool. Then this e-bike, somebody invented an e-bike that accepts payments with Bitcoin's Lightning Network. So that's pretty interesting because, that was one of the companies that was going to come out of the DAO, the ability to rent, vehicles and things like that. And if people were just a little bit patient, they could have had it on the Lightning Network, but now we have it on the Lightning Network. So very, very cool. And then we have, this is an interesting article that just recently came out, and Dan Held has an amazing article that you guys want to check out too, that has to do with this Bitcoin's energy use. And basically what they're saying is when the no corners aren't bashing Bitcoin as a bubble, they can usually be found trying to desperately prove how activities of the miners will bring about the end of the world. So this article outlines 3 reasons why the energy consumption rhetoric is utter garbage. And then another news article here, a little more than 2 years ago, Mimblewimble was released on the Bitcoin Wizard chat channel, and it appears that now the same pseudonym Voldemort has released yet another privacy technology. Just kind of dead drop there on the IRC channel. No history, nothing. Just here you go. Pretty awesome stuff. Mimblewimble is a pretty interesting technology, and there's a couple of companies, a couple of different groups actually trying to come out with a Mimblewimble coin. There's an open source group, and then there's a group that's actually a for-profit company, I think, that's trying to do that as well. And then finally, guys, Vays' Unconfiscatable conference, guys, is going to come to Las Vegas, Nevada, January 23rd through January 26th. I really am excited about this conference, guys, because it's another Bitcoin, not blockchain conference. Lots of good Bitcoin talk to be had, and I'm pretty excited about that. And of course, there's going to be a poker tournament. Being in Vegas, why not? So Tone has a poker tournament anybody can join for 0.1 BTC. And with that aside, guys, let's get the introductions going for the amazing panelists today. First, we have Mr. Dan Held, co-founder of Picks and Shovels. Dan, how you doing today?
Doing well. Thanks for having me.
Yeah, thanks so much for being here, man. Dan's got a bunch of great articles you guys got to check out. We, of course, interviewed him for a couple of his articles as well here on the CryptoCast Network. So thank you so much for that, Dan. And then we got Nathaniel Whitmore from the Long Reads Live podcast, my new favorite podcast out there. Nathaniel, how you doing?
What's up, guys? Thanks for having me back.
Yeah, man, awesome. Really enjoying the conversation and discussion over there on your new podcast that evolved from your tweet storms every Sunday. So I'm really still enjoying those as well. So getting all sorts of great content from Nathaniel. Thank you so much for that. And
awesome.
then You bet, Matt. And then finally, Mr. Francis Puglia, our resident here, right on CryptoCast Network, the CEO of Satoshi Portal. Francis, how you doing?
I'm doing great, Vortex. How about you?
Awesome, man. Awesome. Really glad to have you guys here. Really appreciate you coming here as many Sundays as you can, Francis. Almost every Sunday you make it. So really appreciate it. Always got some good information to share. And so it's pretty interesting, guys. We have a pretty good panel today. We got a couple of people, with financial backgrounds, and then, me and myself, myself and Francis, of course, come from more technology backgrounds. So this should be an interesting conversation today. So with that aside, let's get into the first major topic of the day. Fidelity is launching a crypto trading platform. The financial services provider Fidelity Digital Asset Services, LLC, will provide a cryptocurrency custody and trading services for enterprise clients that the company just recently announced on Monday. So let's go with Dan first on this. Dan, I want to hear from you guys and the panelists what you guys' thoughts are about this. Personally, I'm pretty excited. I always try to remind people, that look, Wall Street, Bitcoin doesn't need Wall Street, but Wall Street wants Bitcoin. And but this is pretty interesting because this allows for me, I think, so many new opportunities. So I want to hear what you think, Dan. Is this Wall Street coming to crush crypto, or is this good news?
I think the only way to construe this is good. This is a huge vote of approval, a huge vote of confidence from the existing institutional landscape. This has been rumored, for a while now. The Fidelity working on a big product was sort of circulated in the rumor mill, and this was exciting to see them publicly announce what they've been building. I think it's a huge leap forward. Fidelity is a well-respected institution, probably one of the biggest names to associate themselves with crypto and building crypto products and solutions for institutional traders. So this, I think this is one of the biggest leaps forward that we've heard all year. I would bucket this in the top 5 biggest announcements.
Very interesting, because we did have, of course, the TD Ameritrade just recently, but that's like a third the size of Fidelity. Is that right, Dan?
I'm not sure. I don't know the numbers off the top of my head, but yeah, Fidelity's huge. So Fidelity's huge. Abigail, the CEO over there, is really into Bitcoin, and I think her approach, or their approach, in terms of just supporting, I think, Bitcoin and Ethereum at first, is a smart, linear path towards a greater crypto landscape. So I think they're approaching it the right way as well in terms of the assets that they're onboarding at first.
Yeah, very interesting. Now, the article does say that they do hope to draw institutional investors, including hedge funds, family offices, and market intermediaries and things like that. So let me ask you, Nathaniel, on this. Is this good news for Bitcoin and crypto? Is this Wall Street coming to crush Bitcoin, or do you agree with Dan that this really is kind of positive news, especially given how they understand Bitcoin? Maybe let me ask you that as well. So is this good news? And do you think that they understand Bitcoin?
So I think there's a couple things. One, in terms of the good news, so on Monday, that was the announcement, and we were doing the long reads live on Monday night, and I had actually 5 people on. It was kind of a big one because it was live from New York. And
you totally beat me. You beat my show, Nathaniel, by far.
It was quite a thing. Anyway, so I went around and I asked everyone, kind of on a scale of 0 to 10, how exciting was it? What's the rank of the news? And I think it was 3 8s and 2 7s, and the 2 7s, the only caveat was basically that it's slated for next year, and who knows what happens between now and then. So it's always worth kind of being cautious about that. So I think it's pretty unrestricted good news in the sense that a couple things. One, it shows the interest, the demand, the sort of pent-up desire to get involved that I think is much sort of beyond just Fidelity. Fidelity is the 3rd biggest asset manager in the world, so it's highly influential. And I think that they are, I think it's always reasonable to ask what the unintended consequences, negative externalities, like any time that you start playing at that level, there are going to be things like the dominant existing financial infrastructure is extraordinarily good at co-opting high promise, disruptive things to reinforce the dominant infrastructure, right? So it's like there's always worth being cautious and thinking about it. But Fidelity is definitely trying to send signals that they are serious, not just about participating, but about understanding what they're getting into. So the thing that I thought was notable is they kind of put together like 4 Medium posts when they made the announcement. And one of them was like a history of digital cash that actually referenced and name checked some of the original projects that kind of came before Bitcoin. And you know, it shouldn't, I guess, necessarily be really impressive that the third biggest asset manager in the world has like an intern who can look up like the history of you know, digital cash and these things. However, I think that what matters more than the information is that they decided to frontline that. To me, it suggests that they're trying to say like, look, we've been watching, we're interested in participating in this, at least, you know, nominally on its own terms, rather than kind of trying to force what we want into it. So I'm definitely optimistic about it.
Yeah, that's what I got as well from the Medium post. They seem to, again, outline the history. You would think that this is not complex or you know, or super important, but or really that novel at all, but it ends up being actually really interesting and important when you compare it with what the ICOs have done, right, with what other companies have come and done, and even the research and stuff that the Winklevoss have done for their ETF. It seems that they didn't quite really understand and quite get Bitcoin as much as Fidelity has from these articles. So from these Medium articles, personally, I do think that they understand Bitcoin's history, and I think that they do want to provide their you know, some features, some software, some solutions that they can profit from as well. You know, helping to build out and flesh out this Bitcoin network that we have here. So it is very interesting to see. You know, they do have they are one of the 5 largest financial service providers in the world, and it says they have some $7.2 trillion in client assets. So you know, they do have a lot of weight and a lot of say. So to see somebody like that get into the space, especially with the demonstrated knowledge from these Medium articles, is I think very positive and very good for the space. So let's see what Francis has to say on this. Francis, what do you think about the conversation so far, and you know, what we've said about Fidelity? Do you think that they understand Bitcoin? Do you think this is going to be good for Bitcoin? And what are your thoughts?
Well, yeah, I mean, I agree with Dan and Nathaniel on the sentiment. I think this is great news. I'm very bullish in that. So Fidelity, I've actually met Abigail Johnson, and she was at Consensus 2017. And during her speech there, she had actually announced that they were mining Bitcoin, which was really awesome. And I actually advised a crypto fund here in Canada. And these guys know Fidelity. So I had heard about Fidelity for a little while. And contrary to what Nathaniel said, I don't think at all that it's just an intern that looked up cypherpunk history and that put it there. I've talked to a lot of people that are at Fidelity, and what I've heard is that they actually took a long time to understand Bitcoin, and we're talking about like more than 2.5 years. And what I've also been told is that the executive management and the board of Fidelity and you know, the upper management, they had regular briefs and meetings about Bitcoin, like regular scheduled meetings to talk about it. So I think they actually do understand it. And you look at some of the people that left Fidelity and that are now in Bitcoin. For example, Nick Carter of Castle Island Ventures, which is a really brilliant guy. I met him in Riga, and he's an ex-Fidelity guy. So I think that can kind of tell you the caliber of the crypto people. And obviously Abigail Johnson, as Nathaniel said, or was it Dan? I'm not sure. She is a fan of Bitcoin, and she's very knowledgeable and very interested in this. And what this does essentially, like as an OTC institutional brokerage desk, I mean, that's hugely helpful. Like in Canada, for example, like I do OTC brokerage. That's what Satoshi Portal does. And we use we're partnering with institutional brokerage desks. For example, the Toronto Stock Exchange has partnered with a firm to do an institutional Bitcoin OTC desk, much like what Fidelity is doing, but obviously much smaller than Fidelity. And I have seen some financial institutions. There is a couple of banks in Canada that are launching Bitcoin exchange solutions as well. So Fidelity is obviously a bigger announcement, obviously, and I think it can only be good. And a lot of people will be afraid. I'm guessing that people will dump like a lot of Bitcoins. Using Fidelity is going to make dumping coins much faster and crash the market. That is definitely possibly one of the fears out there. But I really definitely believe that the ratio of buys versus sell is going to be definitely positive for the buyers, for the buy side. So what I mean by that is that there's going to be more people buying on Fidelity, sending fiat to Fidelity to acquire Bitcoins than sending Bitcoins to acquire fiat. And the reason is, once you have Bitcoins and you're manipulating a large amount of Bitcoins, you don't necessarily need Wall Street grade institutional OTC desks to exit your position. There is slightly more people who need help. For example, you mentioned family offices. That's a great example. High net worth individuals and hedge funds. It is very, very difficult for them to buy at the moment, even though you have like GBTC. And there's also sort of like institutional solutions. You know, you have the CME, the CBOE. What I'm really looking forward to seeing how it fleshes out is what custody and how they're going to handle the withdrawals of the cryptocurrency, so of Bitcoin and Ether. So are we going to be able to actually just send fiat to Fidelity or big checks and get Bitcoins in our treasures? Or is it going to be a kind of synthetic product? And I'm not sure. I haven't seen the details. So if they actually do send the Bitcoins themselves, they allow people to do withdrawals of very, very large amounts and offer custodial solutions. I think that's going to be massive.
Yeah, absolutely. I believe this is physical custody. And so this is really interesting to see Fidelity, somebody this big, like you say, Francis, start mining Bitcoin back in 2014. These guys have been doing internal experiments for years now. So this is really interesting. And to see somebody like Nick Carter, you know, come out of Fidelity, like you say, there's got to be some intelligence there. If Nick Carter was there, then Nick Carter must have shared his knowledge with somebody there. So you have to hope for positive there. And again, you know, Nick is great, written tons of articles, was at the Honey Badger conference, really interesting guy, really has a lot of knowledge to give about Bitcoin. But this is crazy because this is what they say. This is their first step in a long-term vision, right, to create an enterprise-grade platform for digital assets. And this is the same thing as Bakkt, right? This is similar to Bakkt. Bakkt wants to create this custodial type of solution. And this is what was missing, as you say, Francis. All of these large institutional investors did not have an ability to access Bitcoin in an easy way. And now that some of these big players are stepping up, like Bakkt, which of course is from ICE, right, the Intercontinental Exchange, and then of course now Fidelity stepping up with a solution. All of these, of course, not launching until next year. And you know, even Novogratz even said that, look, guys, let's not blow up the markets quite yet. You know, this stuff still has to launch. We still have to run some water through the pipes, right? We still have to get this thing, making sure it's fully working before we really want to go on a crazy next parabolic run. But this stuff is coming, and in my opinion, this custodial solution was the missing link for institutional investors to really start coming in droves. And you know, they're going to support Bitcoin and Ethereum and some other crypto that they haven't quite named yet. And again, I'm just really loving their Medium posts, and we just have to see what is going to happen next year. Now, we have joining us for the first time, guys, in a long time. I want to introduce Mr. Gabriel D. Vine. His return has been foretold in the coming necromancy. So, Gabriel, how you doing, man?
I'm good. Necromancy. I ain't dead yet. So maybe we can find the word, the right type of wizardry to describe it. Thank you very much for having me. It's wonderful to have you. I am showing everyone in the audience the beautiful view behind me, and you can't see my ugly mug, so deal with it.
All right, Gabriel. So if you could go ahead and give us your thoughts on the discussion so far, what you think about this Fidelity announcement, you know, and if they really are going to have physical custody like Bakkt, you know, is this really a really huge announcement, as everybody says it is? Is this really like this top 5 announcement of the year?
I don't have the requisite deep knowledge of like large Wall Street investing that you know, some other panelists are going to have, so it's a little bit difficult for me to judge, to like make an accurate prediction. That's not my background. I'm more, you know, as you know, on the cultural side, on the conspiracy side, on the woo-woo side. So you know, I like to talk about sort of very big picture stuff. This is a little bit small picture, but I'll rather comment maybe on the interesting differences between sort of the cypherpunk origins of Bitcoin, which Fidelity is demonstrating that they understand very well, which I think is quite interesting and speaks highly of their team, as you sort of intimated there in your question, and sort of Francis kind of touched on as well. And so basically they're saying, okay, we understand that this, you know, the origins of this money, and that we understand also that it wouldn't have been possible to create a truly independent and free market money without the ethos of the cypherpunks to guide its development, or otherwise it would be too easily attackable and it would have been destroyed by those who wish to maintain hegemony and monopoly of money creation and money systems, i.e. central banks. I don't want to say governments, because actually the central banks have the governments by the balls, and they're primarily privately owned. And that's something that has been the case for approximately 400 years. So, you know, it's very interesting to see that, of course, Fidelity being a traditional market player and brokerage, in order to make these crypto assets, or I will say Bitcoin and assorted pretenders, available to the large players on Wall Street, that whole system is so used to trust relationships. In other words, dependence, right? It's basically these long dependency chains that add huge amounts of tail risk. You know, as Nassim Taleb likes to point out, these relationships of promises upon promises upon promises. When one promise breaks, there's an enormous chain reaction, and that's how you get these panics, right, and crashes, and then in the other direction you get the bubbles, right, where there's trust upon trust upon trust, and until a link is broken, they can grow to enormous terms. So basically, what you have here is Fidelity coming in and providing a service in order to make this asset, a new asset, available to traditional players that's essentially philosophically diametrically opposed to the ethos, which is, of course, you don't own the Bitcoin unless you control the private keys. And what that means is it's very sophisticated. New techniques are needed. It's a lot of human engineering, social engineering are needed in order to develop the schemes for ownership and control, because the safeguards are so immature. And so you couldn't have, for example, just a single signature address where a large institution would keep $1 billion worth of Bitcoin, for example. Let's say you got 150,000 Bitcoin. You wouldn't keep them in one address with a single signature, because then some rogue employee gets a hold of that private key and they can easily, very quickly, and it's extremely fast and cheap to transfer to, and to steal. So you have these large trust relationships that exist in institutional systems, and that's not going to go away even with Bitcoin, because if you have an institution that is that owns Bitcoin, then you need to have all these numerous social safeguards, and those are going to be riding well above, in layers well above the base layer of Bitcoin. So in that sense, this type of services that BitGo and other companies have been offering for what's the word I'm looking for, where they control the they partially control the, what's the word for it? It's
custodial.
Exactly, the custodianship relationships. Those are really important for institutions. And so on the large scale, now I'll pan way out in time and space. It's conceivable that Bitcoin and other decentralized systems, if they should arise, although I don't believe we've seen any yet, I think it's certainly possible some more might arise, which are not strictly monetary in nature, which Bitcoin is very focused on the monetary use case. If we start to see more, and even Bitcoin itself, it's conceivable that the cypherpunk, not ideas or ideals, but cypherpunk projects and functioning cypherpunk software could have a dissolving and decentralizing effect socially in general on the culture and on institutions. We could see that decentralized systems such as Bitcoin make it so much more difficult to have to create large institutions in general. It could make security so hard and make the benefits of owning your own assets very much yourself individually or on a familial level and nothing larger than these sort of atomic or, you know, small groups, it could make institutions in general in our culture untenable, or at least less viable. So that's a really interesting thing that we should all keep track of, keep tabs on. Just watch the hacks. You know, see how easy it is. See how good BitGo and these other companies get at custodianship schemes. If it's conceivable that we might not be able to figure it out, and it's just too difficult to keep, because unlike fiat, Bitcoin is information and it wants to be free. It wants to flow, and so you know, the custodianship is one of the most difficult aspects of Bitcoin to master. It's conceivable that it could actually deal a death blow to large institutions in general over the next few decades. It's not going to be a fast process.
Yeah, that'd be that's very interesting. Actually, you know, it could actually force entities to a certain size. You know, and like you say, Gabriel, maybe not make maybe past a certain size, make that untenable, because again, you're going to get hacked somehow. There's only so much, you know, security you can provide on that private key if they don't custodial it just right. So very, very interesting points on there. And of course, as always, guys, as we have to mention, you know, not your keys, not your Bitcoin, right? So of course, this is not meant for, you know, these large type of custodianship type of entities are not meant, of course, for just the individual to be able to, you know, like everybody in the planet to be able to use them. No, they are for a very specific solution. Of course, all the hodlers are unaffected. You know, all the people who could want to own this asset themselves. Bitcoin always makes that available. And we would hope that, you know, these type of solutions that come online that expose Bitcoin to more people will have that information, you know, there somewhere. Like, it will try to entice them. It'll entice them to be able to realize that they don't actually need, you know, these type of solutions. They can hold the coin themselves. So very interesting points, guys. Does anybody have anything final to say on this topic before we move on? Francis, go ahead, Francis.
Yeah, really quickly, just to give maybe for people that have a hard time understanding, like what Fidelity, like why this matters for some investors and for adoption. Just think of adoption like you have these different demographics of people that have usually different scales. That's like a key differentiator, like the scales of transactions. So think about someone that wants to, like some lady that wants to buy a domain name with Bitcoin on Namecheap. Like the tools and services that were built to make that adoption happen was like the Bitcoin ATM, because she wants to pay with cash because it's just $100, and the merchant needs a way to lock in the price of the Bitcoins once he receives the coins, because he has costs in USD or CAD, so he uses like a BitPay or something like that, and the person just, you know, buys Bitcoin at the ATM and sends it to BitPay. For imagine now that you have to buy like $75 million worth of Bitcoin to buy a shipment of minerals from China because there's this, you know, problem with the banking over there or whatever. It's difficult. You know, the onboarding tools are not there. You can't do that with a Bitcoin ATM. You can't do that with a Coinbase account. You can't do that with BitPay. You need to have stuff like Fidelity, right, to get that huge stash of Bitcoins. And then the other person on the other side, he needs backed, because he can't like lock in his rate for $75 million worth of Bitcoins with BitPay. He needs an institutional a service like backed to do that. So, you know, if we want Bitcoin to be used for what it should be used, which is like global commodities exchange, like, you know, I want to see like people pay for mineral shipments with Bitcoin. I want people to buy bananas from I don't know, from Europe to Africa with Bitcoin. That's what I want to see, and if you want to see that happen, that's what we need. These tools and these services that just lower the entry cost and entry difficulty and the barrier for this. So yeah, that's how adoption happens. You got entrepreneurs that build stuff to make money, and people pay because it makes it easier for them to get into Bitcoin. And the more easy to make it for the largest amount of people and largest amount of trades, the more money they make. So it's just the beginning. Anybody that wants to make money these days should go into these all the financial institutions that need additional revenue lines. They're going to get eventually into these essentially forex markets, forex conversion and payment settling markets, like they do for forex currencies now.
Yep, great points, Francis. Scales of transactions. You know, it's really, really important when we're talking about this. I mean, the traditional financial system even has all these layers, right? M0, M1, M2, these types of things. These layers take time to build, and they definitely take time for companies and the ecosystem to adopt. You know, I just put out a tweet earlier today that said, you know, because somebody was complaining that Bitcoin is not, it's not ready and designed for people who are living under $2 a day. And it's like, look, guys, you got to take a step back, take a step above, and realize that Bitcoin was really meant to compete with those systems that cause the conditions that make those people that and has the end result of those people only earning $2 a day, right? They're only earning $2 a day because of the financial system, because of the way that it is in place, because of the way that the system works. So many financial systems and entities can't go into every single place in the world. It has to be profitable for them. So what happens is of course we experience economic tyranny from these governments who just completely debase their currencies. Now again, Bitcoin is the ability to opt out of that. So it's not necessarily meant to just be used for transactions for people who are making under $2 a day. It's to improve the conditions so that those people won't have to only earn $2 a day. It's to make sure that there is a global connected financial system to these people, to these countries, so that they can create the conditions that can arise to make them earn more than $2 a day. And of course, Bitcoin is always improving with Lightning and technologies like that. So it's always going to get cheaper and more accessible to access Bitcoin. One final 10-second point from Francis, and then we'll move on to the next topic.
Yeah, just to add a really other important reason why this is it makes it much easier for people to get into Bitcoin is that a lot of the large players have their funds not in a bank account but held by third party like brokers or financial managers. So it is difficult for people to like actually get funds to buy Bitcoin, and this offers the most convenient payment method for these large players, which is the phone call. So now, instead of having to use like exchanges and OTC desks, they can call their financial managers and say, hey, we need this position in Bitcoin. And they call Fidelity and they do it for them. And it's all using the traditional financial pipelines. So it makes it much, much, much easier, like ridiculously more easier for people to get in, like logistically on how to actually get the Bitcoins. They're just basically a few phone calls away.
Yep, very interesting comments. All right, guys, I think we can, excuse me, move on to the next topic. But before you do that, we would ask that if you guys are new to the channel, please hit that subscribe button. If you guys like what you are seeing, please make sure to give us a thumbs up. That helps us get into more feeds. And if you guys are audio listeners of the podcast, we would very much appreciate you guys to give us a review over there on iTunes. So with that aside, let's go ahead and get into our second topic here. Harvard, Stanford, and MIT follow Yale in crypto investments. So we have at least 5 or more university endowments have invested into cryptocurrency funds, suggesting that the herd of institutional investors is finally beginning to fall into place. And so let me ask you guys, let's go with Nathaniel first on this. What do you think about this, Nathaniel, about Yale getting into it? Because a lot of people have said that this is sort of this is what's going to allow the herd to come in. So like the guy who runs the Yale endowment, I forget his name now, Daniel or Mike, I forget his name now, but basically Daniel Swenson. So I believe is his name. So basically what people say is, don't get into anything unless Daniel Swenson gets into it first. So is this really like what everybody is saying, is that now that Yale is in, everybody else can follow? Because that's kind of what we're seeing with these rest of these endowments coming in. What do you think, Nathaniel?
So I think maybe 2 things. First is I think the important context is where endowments sit in the overall institutional landscape. I think I've been thinking a lot about institutions. Like part of the promise of the boom last year, outside of just the ICOs, is that there was theoretically another actor in this chain of money that was going to come in, which is going to be the institutions, right? We've been kind of waiting for this idea of institutions are coming, the institutions are coming, the herd is coming is the new hashtag that everyone's using. I mean, it's been around for a while, but and so the question is really where endowments fit in that. And I think it's useful context to keep in mind as we talk about institutions, we're actually talking about a wide variety of actors. We're talking about kind of the global transactional settlement markets, like Francis was just talking about. We're talking about on the other end of the spectrum, maybe that's just one step beyond you know, the venture funds and things like that are the family offices, right? LPs, individual wealth, who are interested in this asset class. On the far kind of most risk averse end of the spectrum are the pensions, right? Who are responsible for, you know, these very kind of significant amounts of money for pension positions and things like that. They tend to be the most conservative. Endowments are sort of between the family offices and the pensions, right? And this is loose, obviously. You could go way into this, but it's useful because they're meaningfully more conservative as a group than the family offices, right? And so their interest is actually a sign. And I don't know, I feel like the institutions aren't coming as a herd. It's like a thunderous whisper, right? Where it's just happening over time. And it's going to be, I don't think that you're going to see kind of like one major shock to price or anything. Just all of a sudden you're going to turn around and everyone will be there. And so I think that that's kind of what's happening with endowments, where you know, they've been watching this over the last 3 years, right? Like there's hedge fund managers now that come out of the endowment space and so on and so forth. So one is, I do think it's meaningful that you're seeing movement kind of up the chain of risk adversity or down the chain of risk adversity into endowments being actually willing to take positions, at least in funds who are engaging in cryptos. That's part one. Part two has to do with the reflexivity of university endowments in general. So I was an undergraduate at Northwestern and spent the first few years after school building a program design center there, focused on sending kids all over the world to do impact stuff. And Northwestern at the time was coming off of the most significant endowment expansion in its history. It had doubled its endowment from like $4 to $8 billion over the course of like 4 or 5 years. And the interesting thing was, as I was basically getting them to commit some of that money into programs that I wanted to do and yada, yada, yada. And so I kind of had like a little bit of a front row seat for how those decisions were made. And it is, even more than I think some other financial sectors, an incredibly highly influenced, like, who are, you know, what is the top of the hierarchy doing, right? And if you look at how kind of endowments are structured, that's been the case for a while. A lot of people pointed out when this happened that David Swensen, the guy who runs Yale, is the most influential asset manager in that space, even though I think Harvard's endowment is still a little bit bigger than Yale's. Swensen is kind of a hugely influential. So I do think it provides cloud cover to the extent that I don't think all of a sudden these endowments are just being like, oh, kind of now I can be interested. I think they've been interested. I think the question is, when we reduce the career risk for individual managers to do things, that's the kind of domino effect, because they get to be louder now, right? Instead of just PowerPoint presentations about why these things are interesting, they're going to get their peers to actually take second meetings with these different opportunities. So I think it's a meaningful step. I don't anticipate it all of a sudden the floodgates are going to come open, but I do think it's part of a larger mega trend that matters.
Absolutely great points. It's interesting to bring up again that most of these people, like Fidelity, like we say, they were mining in 2014. Most of these large companies, most of these large endowments, most of anybody that's getting into crypto has been really into crypto for years, right? Nathaniel, I think you'll agree that these people have been researching this, looking at this. And like you say, now Yale might have, even more due diligence than a normal fund does, because again, they've been leading the space with David Swensen. And so this is, I think, this is a meaningful step, because now we can, in your PowerPoint presentations, right, you can just point to, look, Daniel's in it. So, there you go. So people can have these yardsticks to be able to point to and things. And like you say, it's not going to be, everybody coming at once, like you say, but this thunderous whisper that takes a certain amount of time. I really like that. I've been trying to tell people, like, this is how Bitcoin, is going to grow in general. You're going to wake up one day, just like you woke up and everybody had Facebook, just like you woke up one day and everybody had an iPhone, just like you woke up one day and everybody had a computer. This is how these things tend to play out. These global world changing technologies, is people tend to underestimate, right, the first couple of years. Or overestimate the first couple of years and underestimate the last 8 years, or the last couple of years, when you're measuring in a decade-long period. So this is really interesting to see all of these schools now: Harvard, Stanford, MIT, Yale, Dartmouth, and then of course University of North Carolina. So to see this is coming is pretty interesting, when we've been talking about this for a couple of years now. So let's go with Dan. So Dan, let me get your thoughts on this. Now we do have these big, huge endowments. Like I think Yale has 30 billion. Harvard has like 20 billion. We have these big endowments coming in, but we're still seeing like relatively little exposure, right? The herd is coming, but we're still seeing them have relatively little exposure. So let me ask you, Dan, what are your comments on that? And when do you see maybe more exposure coming into the space from these people? Because again, it seems to me that everybody's sort of just kind of tiptoeing right now. What do you think, Dan?
Yeah, so I agree with Nathaniel on there's a spectrum of institutions and a spectrum of institutions that are willing to take on more risk versus less risk, and we're slowly seeing the Bitcoin and crypto narrative kind of permeate that spectrum to where it started with the family offices and hedge funds that are willing to dip their toes in, and endowments. We're seeing those as kind of a stepping stone or a validated or kind of like stamp of approval from the existing system. If you look at the assets under management with these endowments compared to the overall institutional assets under management, they are big, but they're not as big as like the sovereign wealth funds or the pension funds. Those are massive. And so I really see this as an important step of validation as this space grows. I think endowments, people go to college. They're in the United States, colleges are kind of widely respected, especially when you look at Ivy League, and to see that it's not just the endowments stamp of approval, it's the university name. That's the idea that these old institutions, which are so embedded in everything in the American life, that these have signed off or given the thumbs up, which I think is really, really important. To kind of the point is like, is this more of a trickle or a flood? We have Novogratz calling it the herd. We have Pomp calling it the virus. Those are a lot of good analogies for what I think might come. I think right now it's more of a slow trickle, slow permeation into that institutional landscape. But I think this is what we need in order for that herd to come, which I do think will happen. But right now, this is more of a kind of a slower trickle.
Yeah, people really do look for those stamps of approvals. I mean, the word sheeple is there for a reason, right? Most people tend to just follow others. Because why? Because that's the easier thing to do. And it's important to remember too that all of this playing out, this interesting stuff about these large endowments. It's interesting because this technology, of course, might be their very downfall as well, right? Bitcoin decentralized technologies will probably help come about to end some of these huge, crazy bubbles that are real bubbles, not the Bitcoin bubble, but real bubbles, right? Like college loan debt and some of these other debt bubbles that have been recently popping up. So interesting to see. Do you have any comments on that, Dan? Real quick. Oh, go ahead.
Yeah, one quick comment on that is that the more stakeholder buy-in we get from all the existing stakeholders, both institutional, political, etc., that's highly important, I think, towards the future of this space. We need people to have skin in the game. The more people that have skin in the game, the more likely that different policies will be passed that will usher in this era that we're hoping will exist sooner than later.
Skin in the game, absolutely important, paramount, very, very important. Again, a lot of people have repeated this, but it's just so important to have skin in the game so you can at least understand these technologies. But it's all about incentives, and a lot of people aren't even incentivized to check out this technology in any depth at all without some type of incentive and skin in the game. Great comments, Dan. Let's go to Francis next on this. Francis, what are your thoughts on the conversation so far about Yale coming in, these endowments? All of these people continuing to need these stamps of approval. I think this is probably one of those times. What do you think, Francis?
Oh, I love the conversation. I don't know much about endowments, so that was super interesting, actually. But I do know about people and skin in the game and institutions. And a comment I want to highlight was from Nathaniel, which was what was it? Sorry. Oh yeah, the career risk. Sorry. So reducing individual career risk. I think that's a key fundamental understanding of how these institutions work and the chain of command and the hierarchy. So when you have institutions like Fidelity or the TSX or now Yale, that are getting into Bitcoin and investing in Bitcoin, if you are a manager for an institution and you want to make that decision, this is globally reducing your own personal career risk, because then you have other institutions to point to. So that stamp of approval works at a kind of risk benefit, psychological risk benefit analysis at the adoption level, which is really interesting. And again, also Dan's comment about skin in the game is something that I have talked about on the show before and on Twitter, which is that for me, over the years, my kind of what you would call it, philosophy towards adoption has kind of evolved. Before, I was kind of more like the Roger Ver type, where I wanted everybody to get on board as soon as possible. And now I think about adoption more as a targeted adoption, because I want to have people in strategic places at all levels of society and the economy to have skin in the Bitcoin game. Because when you have skin in the game in Bitcoin, it changes not only your behavior and through the incentives, it also changes the way that you see the world and your mind, and it changes your ideology, and it spreads the virus. Like that's how the virus spreads. The virus spreads because people have skin in the game and they contaminate others because they want other people to also have skin in the game with them. That's the concept of Bitcoin, is strength in numbers, vires in numeris. But I mean, this kind of level of adoption that we're talking about, like Yale and Fidelity, to me is definitely of a higher importance right now, because thinking about what censorship resistance means for Bitcoin and why Bitcoin is decentralized and why Bitcoin is anti-fragile, it's not a feature of the code. It's the people in the network that have a stake in it, that enforce consensus and that defend the Bitcoin network. And these are kind of like heavyweights in our corner. That's the way that I think people should see them. Like these are Bitcoin people that, despite not sharing like our ideological beliefs like of cypherpunks, they're still like in our corner, and they're rooting for all of us. They want Bitcoin to succeed because they want to make money, and they're not central bank fiat money printers, even though they're financial institutions. They don't make money necessarily by printing fiat. So they're not the enemy. They're just their allies.
Yep, absolutely. Targeted adoption. I'm starting to get on board that train as well, Francis. I want people like Nathaniel owning Bitcoin. Okay, dropping knowledge, financial knowledge for the rest of us geeks here to understand. Like this is very, very important that we get the right people, into Bitcoin as well. It doesn't necessarily need to be everybody right away, because eventually those people will get into Bitcoin. Just like eventually everybody benefited from Amazon and Google, and the internet. They didn't need to necessarily actually be invested in those companies, of course, to benefit. And again, this goes along to that $2 a day argument as well. Bitcoin will rise up the living standard. Bitcoin will provide all these opportunities. Being a sound money, to just having a sound money there to keep the federal banking system in check, right? Just to keep the freaking global financial system in check is already a win-win-win. But it's not only going to keep it in check; it will, of course, continue to evolve and continue to eventually make the other system irrelevant. It's not about necessarily replacing one or the other. It's just about providing this option, and people will just with veracity just continue to improve this thing, because they know the importance and understand the importance of this. So again, guys, of course, value your wealth in Bitcoin. Anti-fragility is only there because of the hodlers of last resort, guys. So make sure you keep your value your wealth in Bitcoin. Let's go with Gabriel finally on this topic. Gabriel, last but not least, my friend, what do you think about the topic and the discussion so far? What are your thoughts?
Really interesting points being brought up here. Hopefully you can hear me over the rain. It's just coming down here in the afternoon. I love Dan's touching upon the relationship between social decision making and ownership incentives in Bitcoin. It's something that can blind people that think, oh, this is software, and as Francis pointed out, vires in numeris, trust in number, right? And yeah, it's software, but in order to, as he pointed out, in order to keep the monetary policy immutable, in order to keep Bitcoin, people have to choose to continue running it every day. And any changes that come down the pike, they have to accept them. Last year was a huge year for a lot of people that thought that this thing was either like Linux or that it was somehow inflationary because you could fork it. And while we saw a fork, it wasn't a proof of anything of the sort. In fact, Bitcoin seems more immutable than ever, and it increased the trust in the system more, greatly, 10x, or 100x last year. So that's a really important point. Is there's going to be people that are more connected with government and more connected with institutions that are going to be fighting in Bitcoin's corner because they're going to be such large owners. The last thing they want to do is dilute their piece of the pie. And so, that kind of takes me to something that you mentioned, Vortex, which is if the owner endowments and funds relationship to fiat money creation and where they sit in the Cantillon effect or Cantillon. I don't know if Francis wants to, is that a French guy? I think it was a French guy, maybe. But the Cantillon effect is, basically the difference of purchasability depending on your distance to the money creation point. In other words, the closer buddies you are with the central bank, the more benefit you're going to get from the new money. At a certain point, the effect is neutral if you're in the middle of that spectrum. And then everybody who gets the money afterward, which is all those people making $2 a day and probably all of us working schmucks, we get hurt by that. Our purchasing power and our economy is diluted, and all that wealth is shunted up to the buddies at the central bank every single time they create bonds out of thin air. So that's the Cantillon effect. That is exactly what you, Vortex, I'm assuming we're touching upon when you're saying Bitcoin is meant to change the current system. It's not just that it's politicized, it's that everyone's getting stolen from and the people at the top are getting the benefit from it. And it's just an entire coercive, fraudulent system. And Bitcoin is meant to provide an alternative, a peaceful alternative to that. And so what we have here are these institutions, and I wonder how closely these endowments and then, of course, the larger funds, they're involved with this Cantillon effect too. While, of course, most of these funds, like these large old founded in the 19th century before, the current fiat Federal Reserve paradigm, and maybe they were more funded with actual assets, and they've kind of just invested carefully and tried to grow their wealth. Still, they're academic institutions, and they have connections to, academic economists. They have certain people that are connected. Maybe they've been able to make some clever inside trades, things like that. It's conceivable that they've been able to leverage this fiat paradigm. And so what I want to say is, like any other institution, these funds' survival is going to depend on not only their ability to protect the custodianship of their coin, of their Bitcoin. Also, they're also speculating on shit coins. So they're going to have to, mitigate any losses that they have gambling on crap, and maximize their ability to hodl through ups and downs in this nascent sound money. A fund like the Harvard Fund, I'm sure, would have allocated around 30%, if not more, to gold in the late 19th century. At that time, that was by far the safest and best investment. You're going to be gaining 3, 4, 5% a year on your investment in wealth sort of power with gold back then. And the same will be true with Bitcoin, except I think more so. It'll have a higher percentage, when as it settles down from this, end monetization phase. So I think it's going to be, they might just survive this transformation. I think, I predict that the great majority, say 80% of university endowments will fail within the next, say, 20 years, 30 years. University enrollment will be down. They won't have any income from that. So they're going to have to strictly depend on the wisdom and sagacity of the investors that are making the decisions at the top of the pyramid. And, insofar as they understand the return of a sound money paradigm, that will determine primarily their ability to survive this transformation into a totally new economy. So get ready for most of these to fail. Get ready for most universities to close. The government money will be gone. The fiat bubbles will disappear, and you'll have to provide educational services that people are willing to pay cash for. So that whole, it's as you pointed out, it's a bubble. There's an education bubble along with all the other giant bubbles, and they're all going to collapse. So it'll be really interesting to see who shakes out, and I have a feeling that nearly all of them will survive because of Bitcoin.
I mean, we are living in the everything bubble, right? That's what everybody says right now. From financial people I've heard, from economists I've heard, even from tech people I've heard. I mean, this really is the everything bubble. This is what we live in. So it's a good point, Gabriel, that maybe some of these universities really won't even be around in 20 years, some of these large endowments, because most of them are propped up by these fiat regimes. So it's going to be interesting to see how much they can hold on. Now, if they can invest in Bitcoin, then of course they might just survive. So we'll see who survives. The ones that are going to be here in 20 years are going to be the ones that invested in Bitcoin. And again, great points about the meat space, Gabriel. We educate. That's why I believe education is paramount in order to keep Bitcoin, because Bitcoin is software code, but as you say, it is managed by the meat space. We all have to agree on certain rules. Nakamoto consensus involves the meat space. And so that's why I continue to believe that education will be paramount with Bitcoin. We have to keep Bitcoin. We have to keep the limited, supply of Bitcoin. We have to not introduce new inflation. There's some things that we have to do to keep Bitcoin. And this is why, channels like mine will continue to educate people and tell them what makes what is important about Bitcoin and why Bitcoin really is important, those important properties. And yeah, that's a great point about, I can't pronounce that, Gabriel, concierge. That's another word. But this is really important to understand. These are terms that you will never learn in school. The term that actually describes how much freaking money disparity that there is, how much disparity there is between the people that know the people creating money and the people that don't. This is really, really important. The cantillon
effect, yeah.
And I'm not sure if that's I'm not sure if that's different from the other term that I'm thinking about, where the governments keep the profits that they make from making the money. So if a dollar is worth a dollar, right, and it only costs 10 cents to produce, then the government keeps the other 90% of that
Maybe
dollar.
That's seigniorage.
Seigniorage, yeah, there we go, seigniorage. So we got these terms flying around. I'm not from a financial background, guys, so I'm trying. But this is just really interesting to see that these things come to light, come to fruition when we're talking about Bitcoin. Bitcoin and crypto is bringing all of these things that used to be, not very well understood into the light. And again, that is just something really, really awesome. We'll see how many of these funds and these endowments can survive it. Again, as Gabriel say, will all kind of depend on their allocation to Bitcoin. So does anybody have any final comments on this topic before we move on? Dan, nobody? Okay, cool. Great comments, guys. Great topic so far. We're almost at an hour, so we're only got one final topic to go. I figured this show might run a little bit long, so we're gonna finish it up here. And really appreciate everybody joining, everybody in the chat. We're having a great conversation. And of course, if you guys missed the show, definitely join us in the comments. We appreciate all the comments there. And of course, we do have the super chat going too as well. So we appreciate all the tips and questions we can get from there as well. So let's go into our final topic of the day, ladies and gentlemen. This is going to be interesting to talk about for the more tech people oriented people on the podcast, but I'm really excited to hear everybody's opinions on this. So we have Ethereum's Constantinople hard fork being delayed until 2019. The developers opted to postpone the hard fork push after several, not just one or two, but several bugs were found in the code that was released on Ethereum's testnet. One of those bugs, of course, being having to do with a Trump tweet, which is pretty interesting to do. We'll go into that a little bit later, but let's go let's go with Dan first this time. Dan, I know you're not a developer, Dan, but you're in this space, man, pretty thick. So I want to get your thoughts on this. What does this really mean for like Ethereum? I mean, does this kind of sort of prove that the move fast, break things mentality when it comes to actually creating financial networks? Does that prove that sort of to be a little bit wrong, maybe a little bit, or a little bit too, a little bit too Silicon Valley when it comes to this? Or what are your thoughts?
Well, I hope you don't mind, but I would actually like to hear everyone else's thoughts and then be able to comment on theirs at the end of this.
Yep, not a problem. Let's go with Francis first. I'm curious to see what Francis says. Yeah, we'll go through Dan after this, but let's see what Francis says, because he's the most tech guy out of all of us. He's smarter than anybody here about tech. So Francis, tell us your thoughts like on this postponing until January, and maybe January, February. They say January, February, but who actually freaking knows? So Francis, what are your thoughts on this Ethereum bug preventing them from actually upgrading their entire network?
I don't care about Ethereum so much. I did check into it for the show, but
I knew you would say that, Francis. I knew you would say it, but go ahead, expound.
This one, my filter is very narrow, so I try to let as little information come in outside of what is my narrow interest of Bitcoin. And just for the laughs, I spoke to one of my friends, my old friends yesterday, and he told me about his aggravation, a return on aggravation ratio. So about his filtering. So when you have these altcoins that are aggravating you, and it's aggravating to look at it, you try to remove that because there's not a lot of return on it. But anyway, so Ethereum's testnet, yeah, I looked it up. So ironically, I think that might be a good thing for Ethereum. That makes me a little bit more bullish on Ethereum, because the devs wanted to make this thing happen out of their like ivory tower, and they designed their plan, and they put it on the testnet, and no one in the community, the Ethereum ecosystem, like upgraded to it. And I mean, I'm not sure exactly. I don't know the details, but I'm not sure exactly what they expect, because they're trying to put a hard fork to reduce the block rewards. Is that right?
That was one. That was just one of the 5 backwards incompatible chain breaking bugs that if nobody upgraded would happen.
Yes. So in April they had like a meeting in Toronto, and I tweeted out like something like, "Oh, it's a secret meeting" or something, and it's like terrible. And like I got like bashed so hard for it. There was like articles on it. And then they had this other meeting this summer, and they decided, I remember this happened like this summer. They decided that they were going to change the monetary policy and reduce the block rewards. And they expect the miners to mine with this new rule set. Why would the miners do that? I'm not sure. I'm not sure what they're expecting. And so the users, I would understand why the users would do that, but they're still running on a proof of work chain. So they I don't know how they coded their activation, but it seems like they were waiting for people to mine it, and no one was mining it. So I don't know. I mean, but yeah, ironically, I think this is good, because that means that they can't push their change. It's also bad because obviously they're doing something really complicated, and they don't really seem to know exactly what they're doing. And I think they're kind of making it up as they go along. And I do feel like they're under a feeling of urgency to do these upgrades. And the final comment. So I don't know much about Ethereum. I don't know what's going to happen with this. I don't know why it didn't work. I think it's just I think it's funny that they just no one upgraded to it. And then the last point that I think that I want to raise is I saw from an article, and I checked at some of their chat, and one of the points during their meeting was that they specifically decided as a group to rebrand it from hard fork to upgrade, which was definitely what the Segwit2x camp did. And there's like logs of that chat where they're like talking about how we need to rebrand this because it's too politically charged. So yeah, I thought that was an interesting thing to see publicly, that they're focusing on that. The political acceptability of their change, using narrative framing techniques.
Yeah, I mean, that's what we saw, of course, last year. And Roger continues to use the term upgrade instead of hard fork. Hey, what's wrong with hard forking and only, 30-40% of the network not upgrading with us? No problem, guys. This is just an upgrade, right? It's just WeChat, just a software application. So pretty interesting comments coming from you, Francis. I don't quite understand either. I mean, what Ethereum really is. Of course, they claim to be a world computer and like this application platform, but really nobody, I think, knows. Ethereum at this point, because they never had a real solid foundation of what they want to do besides, code is law. Like they never actually had some type of very, very, very focused idea, some very focused problem to solve. So nobody really knows what it is, right? Bitcoin had a very, 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 very specific problem to solve: censorship resistance, right? That's why we have confirmation times. It's not necessarily even a payment network, really. It's because we have confirmation times. If it was a payment network, we would just pay one to you, but we have confirmation times, and usually we recommend at least 6 of those confirmations, for larger transactions. So it does end up being more like a settlement network. But again, it solves a very specific problem. So I'm not sure where Ethereum is going to go. And it seems that all of these different people have all of these different ideas in mind of what it should be, what it shouldn't do. Again, there was over 5 incompatible changes that were supposed to be in this particular fork. I'm not sure how they're going to get their community and consensus to agree on all of that, because proof of work does require some form of consensus before you're going to start upgrading. And so it's going to be interesting to see. Again, this was postponed until next year, and they originally wanted to activate in November. again, over 5 of these incompatible, backwards incompatible changes were supposed to be put on the network, including one that, of course, reduced the amount of Ethereum produced in the block rewards. And it's really interesting because there were some minor code optimizations in here too. But again, most of them were just all controversial. Like almost every single one of these changes going into it was controversial. And it's just crazy because the communication manager actually said that they have to coordinate, right, with more miners. They should just be talking to more miners in order to get this through. But it's like, you guys, you're going to go to proof of stake. How are you going to go to your miners to tell them to upgrade to these things that even for something like proof of stake, it doesn't make a whole lot of sense to me. So let's go with Nathaniel next on this. Nathaniel, what are your thoughts on this this bug on Ethereum preventing them from even being able to upgrade? What are your thoughts on them putting so many backwards incompatible changes into one update? Can they ever get consensus for something like that? And really, like, what are your thoughts on what Ethereum is designed to even do?
Well, so I guess I'm kind of less interested in the specific and more interested in the general in this case. So the specific, like, I mean, look, like release the right software is kind of the thing, right? So I'm hugely pro like actually letting developers decide when the right time is, sort of outside of the pressure. And I think that like the market forces will do their work, right? Like Ethereum has a huge number of competitors now who are allowing you to build dApps and do whatever you want to that are like that. And, so it's kind of like to me, like, it probably makes more sense to do the thing that you're convinced is the right thing at the right schedule rather than force something. But I'm kind of like not interested, right? Like whatever. I think that the more interesting thing is, to me, is kind of the points that you were just bringing up, which is like we kind of keep using this term governance, like euphemistically, not talking about the immense politics of decentralized networks and getting changes and trying to build consensus, right? And I think that that's what, Bitcoin has been through that. Ethereum is now, it's been through that a little bit, obviously, with Ethereum Classic, but it hasn't, I think that there's an inevitable point where this sort of governance by default that I think happens, where people can either choose not to upgrade their nodes or whatever, like run the new software, starts to break down when you get more complex decisions where some subset of the community says, this is a painful thing that's necessary for the future, and some other communities disagrees. And it'll be really interesting to see how they handle that, right? Because, to your point, there is a huge amount of like, one change like this requires a huge amount of just consensus building and campaigning, frankly, to borrow another political term. 5 is really there. So, the question is whether, Ethereum's official or de facto leadership can actually align and coordinate people. But, my instinct is that we're going to have a much more robust conversation about governance and sort of, protocol politics over the next few months, because I think that it's going to be even more than it is now, a competitive vector where people are trying to compete on the basis of what, how articulated their governance is, what they can do, right? Like I kind of think you're going to start to see people much more than now identify or choose to self-identify with approaches to change and kind of rule systems that make sense to them, and there's that don't. So I kind of think it'll be an interesting case study to watch, just more broadly.
Yeah, there's all of these people, Decred and EOS claiming to have these sort of on-chain governance policies figured out, right? But of course, both of them have continued to have issues that these governance consensus mechanisms cannot solve. We've seen EOS, have bugs. We see now Ethereum have bugs, and Decred, of course, has had bugs. So we see these claims, all these crazy claims that people have this on-chain governance figured out. But I'm with you, Nathaniel. Like this is so early. People don't even understand Nakamoto consensus.
Yeah, no one has on-chain governance figured out. Anyone who says that, you can run in the other direction. Like that's an insane thing, because we don't even have it figured out whether it makes sense, right? And in fact, I think that people are likely to, how they feel about on-chain governance, what they think it's going to do, how, it is going to be a major point of division between different protocols. So I don't know. That's a crazy statement to me, but
yeah, it's crazy. But you look at them, they're scrolly websites. You see all of these features, and they're like governance. you know, these things like that. So it's worth noting, I think, worth pointing out that really this stuff is so early that nobody has it figured out, and least of all EOS and Decred. Let's go to Gabriel, and then Francis has a comment before we go back to Dan. So Gabriel, what are your thoughts on this conversation so far with this crazy bug, multiple bugs of Ethereum? You know, will they ever be able to upgrade? Will they be able to figure out what the heck they even are?
I do have a few comments, but I'm dying to hear what Francis has to say. So you go quickly, and then I'll go. Okay.
Okay, go ahead, Francis. We'll have you go first.
Yeah, it's just a second. So basically, a comment I want to make is that it's so difficult to run an Ethereum node that there actually is a very limited amount of relevant people to this discussion. So I think realistically, you need Infura to be on board because they're running nodes as a service for a lot of people. You need Consensus to be on board, and you need the Ethereum Foundation to be on board. And then you need like 5 or 6 mining pools to be on board. So unlike Bitcoin, where you need to get like 1,000 or so companies to upgrade their nodes to this new thing, in Ethereum you need realistically, I'm not exaggerating, like you need these 3 companies and that's it, and a few mining pools. So clearly the devs didn't do their, I don't know what's going on, if there's like they didn't coordinate or something, or it was just a weird thing. But it shouldn't be that difficult for them because the node network is so centralized. And if the node network is centralized, we already know the mining pools are centralized in Bitcoin too, but at least the node network in Bitcoin is relatively decentralized. It's centralizing, but it's relatively decentralized compared to Ethereum. So the end users that are actually at those conferences actually don't matter. It's pretty much like Joe Lubin's call at this point.
I mean, it's hard to not deny that. I mean, you look at the Ethereum ecosystem, and like you say, all you need really is Consensus, Infura, you know, a DCG maybe, just a couple of companies, and you pretty much got the ecosystem on board, which begs the question, why couldn't they just get those simple companies on board, right? Well, I think that there was some kind of misalignment in goals and incentives. So again, when you have 5 backwards incompatible changes, guys, you're going to need consensus from everybody. You need everybody to agree. And clearly, I think that they couldn't get somebody to agree on every single one of those changes. Because again, as you know, as as Francis and Gabriel said, like nobody basically upgraded. Almost nobody upgraded, and the bug itself, of course, caused a crash. So crazy stuff. Gabriel, what are your thoughts on this?
Well, if you'll allow me to be a pedantic sod for a minute, first of all, it's pronounced Constantinople, and secondly, begging the question is a fallacy. That's something else. It prompts a question maybe, but yeah. So you're triggering me there.
Gabriel's always keeping my literacy in check.
That's right. That's right. But you know, I love you, brother. You know, I just brought up this article on Cointelegraph that's called "Ethereum Devs Reach Consensus to Delay Constantinople Hard Fork Until January 2019." It's very funny that they use the term consensus here because that's a term that Bitcoin uses for nodes to agree on which software they're going to run and how to move the chain forward. And to say
exactly.
that the devs are reaching consensus is like saying, it's like saying our family reached consensus that we're going to continue breathing air for the next year.
That's what I think it was. They didn't reach consensus, just nobody upgraded.
Yeah, specifically they're responding to a lack of consensus. But in any case, there's as usual, you know, Cointelegraph has a wonderful illustration, and it's some sciencey looking people in space age outfits that are taking Ethereum's temperature and measuring it and taking its blood pressure and taking a blood test, and they all look very professional. And it really reminds me of the new Netflix show with Jonah Hill and Emma Stone called Maniac, which is an excellent science fiction sort of alternate universe show. I thought they did a great job with it, based on a Norwegian show originally. And in that show, they're in a study, in a scientific study, and you get to see it from the patient's perspective as well as from the scientist's perspective. And the scientists are you know, one of the scientists is you know, addicted to one of the drugs that he's like freebasing one of the drugs they're testing, and it's a total mess, you know. And then you find out that the whole spoiler alert, the whole study is actually like a way for the head scientist to deal with his mommy issues, you know. And it's like this whole political thing, and that really, you know, I think this photograph is not photograph. This illustration on the article is very revealing in that sense. You know, Ethereum is a classic case of scientism, It's engineering theater, right? They use marketing and, like you said, the scrolly website and very, very highly complex, confusing rhetoric that's meant to attract ignorant but like you know, I don't want to say but sort of sophisticated investors that are not sophisticated in technology. So since it's a very new field, they were able to leverage that with Buterein's totally inscrutable and abstruse, you know, communication style that's meant to make him seem like a guru. But actually, if you dig a little bit beneath the surface, you realize that there's nothing there, just like his fake quantum computing project that he had before Ethereum. And so projects like this, as you guys pointed out, which was, I think, very sagacious, you know, the hard forks as a method of quote unquote upgrade only works insofar as your system is centralized, and all the devs want to have their cake and eat it too, just like the scientists in Maniac. They want to be able to, like, you know, fight their mommy and also do, you know, groundbreaking real science. Well, you know, usually those things don't go together, and you're gonna make sacrifices of your science, and you're gonna have fake scientism, and you're gonna pick and choose your data to support your, you know, emotionally charged, you know, political model that you want to try to prove. And as you pointed out, Ethereum doesn't have a base, you know, ethos that goes back decades. They're just winging it as they go along. They're changing and pivoting as they need to in order to try to keep people buying their worthless token. And so we see the classic result of that. All they needed to do was get 8 people on board to agree to this hard fork, but they couldn't even do it because they think that they're leading this project. So they want to pretend with their marketing that they have a decentralized project while still being in charge of everything and making and calling all the shots. And now we're seeing that that doesn't quite work. And there's a bit of pushback, and maybe hard forks aren't a viable way to move forward once you grow a certain size. And there is a little bit of decentralization. You do have a few different competing parties with competing visions. So it's interesting to see these things happen. It's not really a surprise. But on the other hand, like Francis, I do believe that throwing it up on a test net before actually going forward with it is a sign of proper engineering, at least. So they've got that going for them, where they saw that this thing didn't work and it was crap, and they decided not to push it instead of hurrying forward, you know, in order to impress people with another software release, which is not impressive to anybody in the software realm. Anybody in the software realm who sees what's going on with this company is going to say, wow, that absolutely reeks of amateur software development that's poorly organized. So there you go.
Yeah. Engineering theater. This is what we see a lot in a lot of these projects. You know, of course, Ethereum has a couple of different things, right? A couple of people in the chat are screaming, but ERC20, ICOs, and it's like, okay, you know, we can do some fundraising. You guys helped a whole lot of scams get richer. Look, that's not good. That's not a world changing thing in ERC20, right? That's not going to hurt the central banking cartel. That's not going to change finance as we know it. You're just basically what happened with the ICOs in the US, at least, is that they just basically were made illegal for the most part. ICOs at this point are have to be completely outside of the United States. So just nobody that's going to support anybody in the United States for these ERC20 tokens. And now, of course, what everybody's talking about, at least in the United States, is STOs, right? Security token offerings. And they most likely won't be on Ethereum. They're going to be on other platforms like T0 and things like that. So it's interesting to see. Yes, they have this ERC20 use case, but it's a very short-lived use case. And I don't think that you can argue that all of Ethereum, you know, all of the network and all of the people coding on it and all of the ecosystem itself was, you know, all just to get an ERC20 token to work. Like, obviously they wanted more than that. They wanted this unstoppable code and these things. But again, these things are all ethereal. They don't mean anything. What does unstoppable code mean? Like, you know, nobody's ever stopped my Amazon S3 instance at Amazon. Like, nobody's ever went into my customer and client's data, you know.
Yes,
right?
They are ethereal.
Exactly. So it's really strange, these ideas, unstoppable code, and these things. When you really pull back all of this engineering theater, what you see is so far just this ERC-20 and a super complicated, ridiculous white paper that uses the word decentralization like 40 times without ever really defining like what it means and how it can be achieved. So very interesting stuff there. Let's go with Dan next on this. I know, Dan, you've been waiting for a while. We called on you first, but now we are all eagerly awaiting your comments, sir.
Well, yeah, I appreciate. I wanted to get everyone's perspective so I could comment on it because I've been going first the whole time. So, I'd like to initially call out Nathaniel's article on complexity theater, and I think he has a really great Medium post on that, which is fantastic. And to dig into that further, because I'm in Silicon Valley, so I can shine a little bit of light on this. Silicon Valley, has a certain mental model. And Ethereum came out with a platform in dApps. And so it fit within Silicon Valley's mental model really, really well. It's something that they could understand. Silicon Valley doesn't understand sound money or the history of money. They really don't even understand the 2008 financial crisis, largely. Most people are just heads down building products. And so for them, Ethereum fit within that mental model really, really well. And that's why Silicon Valley really, really embraced it. For them, complexity equals value. Complexity and layers of sophistication, of eloquent text speak, the individuals behind it, I'm not going to name who, look a certain way, to where they're young and nerdy, and Silicon Valley idolizes those sort of individuals. So I think, for Silicon Valley, Ethereum fit the mental model perfectly. Kind of zooming out and going back towards governance or decentralization. Decentralization, you need to have decentralization on the political level, on the node level, and on the mining level. So, or at least like or consensus level. So I think there's pros and cons to having more centralized governance systems versus decentralized ones. I'm a fan of more decentralized systems rather than centralized, but centralized lets you move faster. And so I think we've seen some really kind of pivotal moments for Ethereum where they haven't gone through a crisis yet, whereas Bitcoin has gone through a civil war with Bitcoin Cash. And I think Ethereum is going to hit that point when pressures kind of build, when expectations have been so highly set for the protocol. Expectations are going to build, or tensions are going to build behind that as things don't move as quickly as people would like them to. And then I think we're going to see that sort of stress test that governance model.
Very interesting. Yeah. When somebody finally decides to not move fast and break things. Right.
And I think, ultimately we see some comments from Vitalik also shining light and showing that, hey, Vitalik isn't a god, which, developer worship is a really, really, really bad thing in Silicon Valley. And we see it all the time where certain developers are literally worshipped. Everyone's a human. Vitalik's a brilliant guy, but he's a human. And with his comments about scaling or like having the need to not have, or the idea that you don't have to have full Turing complete scripting on the base layer, he wrote a blog post on it about a month and a half ago. So I think that was kind of a big moment where we saw that like no individual human is genius enough by themselves. They need a team. They need to clearly communicate. They need to clearly roadmap, and they need to come up and set expectations properly so different stakeholders within that system can align themselves. And I think with Bitcoin's development team, it's a little bit more mature, quite a bit more mature in terms of setting expectations and road mapping and doing just very, very, and this is the boring stuff, right? No one wants to talk about these sort of things because it's boring old classic software development rather than like, hey, let's talk about new open finance that's super cool and we can do all these cool things. And I'm like, yeah, I agree too. They sound awesome, but you got to go back to the basics of just good software development.
Right, that's right. Open finance, guys. It's the future. I'm telling you. So again, that's not another one of these terms, Dan, that we're saying that's coming out of the Ethereum camp that is just ethereal and really, at the end of the day, means nothing. Like, how can you have decentralization or open finance without actual fundamental, censorship resistance, right? So it's these terms that I think a lot of Bitcoiners sort of take issue with, is that some of these Ethereum, these ethereal terms, it just doesn't make a whole lot of sense. And I got to say, like, developer worship is dangerous, and we've seen it in Silicon Valley. We really have. And I myself still like worship Steve Wozniak. I should have like a picture of him, like with some candles or something. But like, this is the danger of that kind of thing, because it allows the groupthink to come in, and then it kills the individuality, right? And that's what's important. That's what drives human innovation forward. Not this sort of groupthink mentality, but this thinking outside of the box, creating these new paradigms, these individual self-sovereign thinking. This is what, of course, I believe Bitcoin encourages. And I think that Ethereum still encourages this sort of Silicon Valley, like, just build a platform and like just get 1 million users and everything will be fine.
Yeah, I agree with Dan there. That's a really, really important point. I've spoken to this numerous times over the last year and gotten blocked on Twitter because of it, from some people that whose businesses and some of the things they've done I really admire, and they blocked me because I was pointing out that Bitcoin and Silicon Valley have some major philosophical divisions, and there's a real gulf there, because Silicon Valley was funded by not only the proximity to universities and all the brain power coming out of various universities in the Bay Area, but also through the CIA. And In-Q-Tel is their technology investment arm. A lot of the money came from black sources, or even just above the board stuff that's just straight from American spies, essentially creating these tech companies as a way to bring money in, as well as to do secret R&D for them. So they have secret side and then the public side, and a lot of that money is just being pumped in. In Saudi Arabia, as Francis is pointing out, is investing in these startups. So there's a lot of dirty money. There's a lot of fiat bubble money. There's a lot of fake, and they depend on that. They depend on the gatekeeper system, and there's this whole middle manager and executive culture for these entrepreneurs that biz dev. There's all those biz dev sort of piranhas swarming the tech people, and they're all looking for, like you said, engineering theater. They're all looking for the kids who seem like they might be something amazing someday, and that's exactly what Vitalik was capitalizing on, is these people that actually don't know anything at all about tech. They just know the buzzwords, and that's how the blockchain bullshit is continuing on. So there's so much what they call in software engineering cruft, which is extra crap that's hanging out and clogging up your great functional code. There's so much social cruft in Silicon Valley that is currently dying, and a lot of people can't see it. But as this fiat paradigm continues to work itself out and dissolve into nothingness, into hot air, the same hot air where the debt was created from, it will collapse back into. And essentially, Silicon Valley is a centralization hub in order to create tech silos, and that era is now ending. Tech is spreading out. There's hubs in whatever, the Adriatic and China and India and Russia and South Africa and South America. This tech silo era is has already peaked and has crested, and right now is in this sort of like tumbling. The top of the wave is just starting to curl, and only the people like us looking at the top and seeing, oh, that's actually crumbling, and the wave will crash and never come back. But yeah, most of the people in Silicon Valley are in the middle of the wave and can't see it; they're blinded. So there's a huge difference, and there's a massive gulf philosophically between the traditional Silicon Valley, what I want to say, 90s kind of thinking, and Bitcoin. And Ethereum is very much intended to draw off that wealth and draw off that brain power to work on this scam, essentially.
Yep, and more engineering theater. The fiat bubble culture that's what I think we're seeing. Let's go with Dan. Dan had a final comment on this. What do you think, Dan?
Yeah, I think it's important that people understand Silicon Valley's perspective as to why Ethereum is so attractive. There's one other part about the stakeholders in Silicon Valley that I think really shine a lot of light on this, and it's the VCs. And Gabriel did a good job of pointing out that, hey, VCs are looking for these type of founders. But even going even further, VCs like to exert control. So Bitcoin inherently you can't control, which is really frustrating for a lot of people. And for people to really grok that, it's hard for them to grok. It's tough. It's this inflexible thing that won't bend to their will, where these stakeholders typically have influence over things. And so I just wanted to call that out as something that I think where Silicon Valley, I think, better like the idea of exerting control over these projects rather than it being totally out of their control.
Yeah, that's this centralization that they're used to, and they're just creating these tech silos. The VC can float on top and say, "Hey, now cool, we have an 80% stake in this baby, and we can totally tell it where to go. And now we can take this contract from the Omani government. We can take this contract from the Chinese government and just create their siloed censored search engine or whatever, different stuff, and we could just totally take this whatever agnostic compression tech or whatever and just shunt it into whatever connections we can make." And like you said, they're not used to that, and those those executives and VCs that think they can control stuff, they gave it a really good college try last year by attempting to shove through SegWit 2x, and they learned the hard way that doesn't work with Bitcoin. So, and it was very encouraging for all the people who thought that Bitcoin was just another tech platform that was going to be taken over by big fiat. They realized this is a different beast entirely. It's totally new. It's something genuinely new, which is really rare.
Yeah,
and I'd like to highlight real quick that VCs do play a very critical role in Silicon Valley, and I think they play a good role. But when it comes to Bitcoin specifically, I think for them it was particularly frustrating. But I want to highlight that I'm very, very much bullish and excited about what VCs do. When it came to Bitcoin, I think that's where it got a little bit funky with them.
Yep, fully agreed. Fully agreed. I mean, just look at the name, guys. Ethereum Enterprise Alliance. Does that sound like a decentralized sort of like federation with everybody's goodwill in mind? Not so much. To me, it sounds like a banking conglomerate. So very interesting points, guys. Does anybody else, Francis or Nathaniel, have any final words to say on this topic? Francis.
Yeah, just a quick comment on the cultural and lifestyle commentary of Ethereum that we're having. I have found that I have a startup. I'm into the startup space. I hang out at startup accelerators. I'm a mentor at startup things and hackathons and that kind of stuff. Like, I like doing that. And then I see a lot of people that I call lifestyle entrepreneurs. So these are entrepreneurs that are in the business to participate in a community, to get for self-esteem and for that kind of stuff. And in the blockchain industry and Ethereum particularly, it's really easy to be an entrepreneur. It's like everybody's an entrepreneur. Everybody has a startup. Everybody's a project leader, and you get this natural subsidy because there's no competition. There's like no one's using these dApps. Like there's like 5,000 users per day. There's no real competition going on. And Ethereum runs on compassion, essentially, at this point. I mean, that's the fuel that drives it. So I really love Dan's comment about how they never actually faced a crisis. And when the people that have a really large financial stake from Asia and from the US, for example, they're like, okay, so now we need to get this shit going. Like we have a lot of money in this. They're kind of like the same thing for Jihan with Bcash, for example. That's gonna, and that's what we're seeing in Bcash. So that's what's gonna happen in Bitcoin. It's very difficult to be a lifestyle entrepreneur with a real business, because if you're doing transactions as an exchange, for example, and any kind of OTC business, you're competing with a lot of people. You get actual money flows coming in and out. You got all sorts of fraud, all sorts of crap. It's a hard life. It's a hard business, and the herd gets thinner, gets thinned out in Ethereum. In Bitcoin, pretty rapidly. I mean, people get crushed all the time. There's like there is a toxic atmosphere, and the kind of culture I think here is adversarial, and that's anti-fragility. I mean, it's difficult. Like I'm I don't want to be mean, but I think a lot of the people, Vitalik, when he started Ethereum, like he was hanging out in Montreal and Toronto, and it was pretty clear that he didn't feel like he had enough influence in Bitcoin Core to get his stuff passed there, and the mean culture of Bitcoin Core, like perceived, was a big component. It was actually a big component in Ethereum's founding, and like the unicorn and the rainbow, it's part of their culture. So these cryptocurrencies are war. Like this is real life stuff. Like I tweeted about it, I think a few days ago. It's like we're fighting against the Bank of International Settlements, the Federal Reserve, central bank fiat system. We're competing with gold at the same time, fighting payments infrastructure giants like Visa, fighting application layer companies like PayPal and WePay. Whereas Ethereum's not competing with anything, and it's only speculators that are really the only. There's no users. Like there's no users. There's entrepreneurs there's a ton of entrepreneurs, startups that have no users, that are living a subsidized lifestyle. You got these speculators and these funds. You got the dev class, the dev community there, and you got the miners. So that's not anti-fragile. There's too much subsidy there, and when the crash happens is going to be hard, and it's not going to be it's always going to be easier for us to deal with these things. We're going to have a much higher success rate at black swan events and crises. So from an investor's point of view, like that's the way that people should see these things. Like Ethereum is full of systematic risk, and Ethereum can break like at a black swan event. Like I think we can all imagine like 6 or 7 scenarios that could fuck up Ethereum hard. And Bitcoin is getting much harder. It is getting much more robust. So yeah, that's my thoughts on that.
Yeah, great comments. It just reminds me of like that 2010 startup culture, sort of like with TechCrunch being the main thing. Everybody wanted to be a CEO. Everybody started a company and was CEO of their company. So of course, on their LinkedIn, they're like CEO of such company. And of course, what does that actually mean, right? It means nothing if your company doesn't actually have any customers. And so again, just more of this theater kind of stuff, and really important to remember, guys, like this toxicity that people perceive as, it's really just adversarial thinking. It's this adversarial thinking that creates this anti-fragility. That allows us to survive black swan events. So very interesting. And of course, proof of work is a zero-sum game, guys. Like, look, that's why Ethereum, of course, so badly wants to go to proof of stake, but really it probably won't be able to. I mean, at this point, they have so many miners that are invested. It's going to be interesting to see. And again, guys, I try to say this all the time, that Bitcoin really doesn't actually have any competition in the crypto sphere. What Bitcoin is actually competing with, of course, is the central banking cartel, precious metals, and these type of things. So, but luckily, Bitcoin, of course, has many layers, so it's beautiful. We got Liquid Network to compete with Swift. We got Lightning Network to compete with payment networks like Visa, and of course, Bitcoin competing for that base money, that base layer, that base settlement system that the central banking cartel currently owns. So very interesting, guys. Very interesting comments. Great stuff. Does anybody have any final thing? Nathaniel, anything final? One final?
No, I mean, we could go on forever.
I guess we could.
I mean, I guess the only other thing that I'd say that was a point that I was thinking about earlier as it relates to kind of all of this, but especially when we were talking about the institutions. I think one thing that's worth keeping in mind as new institutional news comes, and we kind of talk about like, who, do they need Bitcoin? Do we need them? And that sort of conversation. It is interesting to me to think about like, the more prominent that Bitcoin gets, the more the higher the grade of the bosses that we're going to face, right? And to some extent, one of the things that I think is interesting is the deeper that these sort of financial institutions are involved, especially in ways that we find kind of more rather than less palatable, the harder it's going to be when bigger privacy comes in and Wimble's implemented on a sidechain of Bitcoin, and all these sort of things that are going to make governments get real nervous. Or alternatively, China issues an RMB-backed cryptocurrency, and crypto is all of a sudden associated in government levels with bad, or whatever it is, right? Whatever event that creates it more contentious. I think we're kind of in a pick our allies phase, right? So I think that's just something I was thinking about as we were talking earlier.
Great comment. I like that, Nathaniel. Pick our allies phase, because everybody tries to put Bitcoin in all these different phases, and there's all sorts of ways to do that. But it is interesting. I mean, especially during this this consolidation time, it heightens the pick our allies stage, because now it's not just pick our allies; it's like pick our allies and how much value we're going to attribute and allocate to this new project. So very interesting comments, Nathaniel. The final boss, guys. The final boss is coming. It will be, we're going to see who's going to be able to actually compete with the final boss, but my money is on Bitcoin, guys. So thanks so much for your comments. Really, really appreciate it. We're going to end it here, guys. We've been going for over an hour and a half. So I just want to thank everybody so much for your guys' comments and everything. Really, really, really appreciate it. If you guys missed us, again, join us in the comments afterwards if you guys missed the show. But again, really appreciate everybody in the chat, everybody coming. We had over 130 at least viewers, so a great audience. Really appreciate everybody coming. Let's go ahead and ask our guests where we can find them, and we will end the show. So Dan, please tell us, where can we find out more about you, sir?
Follow me on Twitter at Dan Held, or check out my Medium posts. My Twitter account links to a lot of my Medium stuff, so I'd recommend that for the TLDR of my thoughts.
Absolutely, guys. And of course, he has amazing articles, and he is known as Dan Heddle on Twitter, of course. Really, still love that that username, Dan. All right, Francis, where can we find out more about you, sir, Mr. Francis Pouliot?
You can follow me on Twitter at @FrancisPouliot_verified mark, please. You can also check out Medium as well. I have a Medium blog. I'm going to be posting a few things. Follow me on the CryptoCast network. I am also, my projects are bills.com, BYLLS.com. And if you're a developer or you're interested in like running your full node kind of software, I can also check out cyphernode.io, which is my new project.
Yeah, definitely check that out, guys. Cyphernode.io, very interesting project. We're going to do a show about that here on the CryptoCast Network. We're going to do a deciphered episode to try to dig into more of that, because I really think this is, guys, one of the most important projects like released in Bitcoin's history. So definitely got to check that out. Very, very important for the decentralization. Then we got Gabriel. Gabriel, tell us, man, where can we find out more about you, sir?
Twitter, Gabriel at Gabriel Divine, D letter D. Vine, V-I-N-E. See you there.
Yes, thanks so much for joining, Gabriel. We really appreciate your commentary, man. First time on the show in a long time. We hope to have you on more often. Nathaniel, where can we find out more about you and your awesome podcast?
I'm also on Twitter at NLW, and there's links to YouTube and everywhere else from there.
Yep. Everybody's got to check out the Long Reads Live. Nathaniel does that podcast every Monday. So everybody check that out. Really, really great show. So really appreciate everybody on the show, guys. So much good commentary. We went almost 2 hours. I tried to keep it to an hour, but there was just so much good stuff to talk about. We went deep on a couple of these topics, and I had a great time. I think you guys, I think the panel did as well. And I hope everybody learned something. So until next time, guys, please keep on talking Bitcoin. We'll be right here on the CryptoCast Network with plenty more shows to come in the future. So we'll see you guys later. Until next time, of course, always keep talking Bitcoin. We'll see you guys later.
Keep talking Bitcoin.